Gold is not a fiat currency. There's a limited amount. It is recognized as a store of value. The Chinese People's Bank of China is the largest buyer of gold now. Besant and Trump have just said is gold, 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 not Bitcoin. So the next month, no central bank holds Bitcoin. There are countries that hold Bitcoin, but the central banks don't have Bitcoin. Most central banks do have some gold. It's a tier 1 asset for them.
That silver to gold ratio, right? The price of spot silver to the price of spot gold. It's been at nosebleed levels, like 110 times, something ridiculous like that. Remember what the original ratio was? A 20th of an ounce of gold, what I have in my finger, to 1 ounce of silver, right? So 110 to 1 is a far cry away from that 20 to 1. So my expectation is to see, because this is what history shows me, is that ratio will narrow. Then as we enter the hyperinflationary phase, I believe it will grow again, because again, that's what history shows me.
Mike Malony, a renowned precious metals expert and monetary historian, explains why gold remains central to global finance. Gold remains a non-fiat, scarce asset recognized globally as a store of value. As Mike Malony explains, central banks, including the People's Bank of China, hold gold as a tier 1 asset. Unlike Bitcoin, gold is universally trusted, widely held, and endorsed by global monetary authorities. Lynette Zang is a respected economic analyst and precious metals expert, known for her insights on historical market cycles. Zang explains that the gold-to-silver ratio has reached extreme levels near 110.1, far above the historic 21 standard. Based on historical trends, she expects the ratio to narrow before expanding again during a future hyperinflationary phase, signaling major shifts in precious metals markets. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Most central banks do have some gold. It's a tier 1 asset for them. And then the White House put this out a while ago. On the financial side, the reserve function of the dollar has caused persistent currency distortions and contributed, along with other countries' unfair barriers to trade, to unsustainable trade deficits. These trade deficits have decimated our manufacturing sector and many working-class families and their communities. To facilitate non-Americans trading with each other. The next thing is a tweet from Donald Trump, the golden rule of negotiating and success. He who has the gold makes the rules. Now, everybody sort of knows Donald Trump's mindset. He has to win. He wants to win at all costs, and he is willing to put the entire global economy at risk in order to win. That's just his personality. So, he who has the gold makes the rules. This is how much gold each country has. The United States has like 2.5 times more gold than the second place, Germany. And if you look at China now China lies. They do not give us the truth when it comes to their data and their holdings. They probably have twice as much gold, but still, even if they had twice as much gold, we've got twice as much as that. So what does that mean? That means that Donald Trump gets to win, win, and win. He gets to, if we go back on a gold standard, he gets to devalue the dollar. And you do that globally just by changing the price, the official price of gold. He gets to put the trade back into balance. Manufacturing will come home if this happens. And he gets to maintain fiscal dominance around the world. Because we have the most gold, the dollar will still be king of the world. And so he gets all of these wins if this happens.
According to Mike Malony, gold remains a tier 1 asset held by most central banks, reinforcing its power in global finance. He highlights how U.S. trade deficits, driven by the dollar's reserve status, have weakened manufacturing and working-class communities. Referencing a White House statement and a Donald Trump quote, "He who has the gold makes the rules," Malony explains the strategic advantage of U.S. gold reserves. The United States holds over twice as much gold as Germany, the second largest holder, and far more than China, whose reported figures are widely questioned. Malony argues this dominance could enable a return to a gold standard, allowing dollar devaluation through gold repricing, rebalancing trade, and potentially bringing manufacturing back to America.
Physical gold and silver, because the reality is, and the guys at the top know this very well, if you don't hold it, you don't own it. So what we're looking at here, because I pulled them from last night, is this is the spot silver market. And of course, it went up even more this morning. That's from yesterday. And then this is the spot gold market. And spot gold had a pretty darn good rally. But keep in mind those 200-day moving averages. So if we get a little pullback, remember how I told you it twice in this chart? 10% away from that 200-day moving average. And I don't care what you're looking at. It can be stocks, it can be cryptos, it can be spot gold or spot silver. It doesn't matter. 10% away from that red line, the 200-day moving average, is considered a lot. Well, I can't really read it from here, but we're about probably 30% away from that 200-day moving average. So it can stay up there, and what you're looking at here on the chart is a consolidation. Just stays inside of a range, giving that 200-day moving average a chance to catch up to it. So we can get a little bit of a pullback, and it can just stay in a range, not overvalued. Fundamentally, technically, it can be overvalued, like pretty much every is right now in the markets, because they want to keep you in there. But, I know I'm going to get asked about a correction, and we could certainly see that, and it wouldn't bother me even one little bit, because what you're really looking at here are paper contracts. That's what you're looking at. Easy to buy, easy to sell, cheap. They can control a lot of gold and a lot of silver, but it's in the physical markets, things don't that quick, and that's where I have my wealth physical mark. Talked to many times, and I've shown you this before, that before we get to that visible high inflation, that silver to gold ratio, right? The price of spot silver to the price of spot gold. It's been at nosebleed levels, like 110 times, something ridiculous like that. Remember what the original ratio was? A 20th of an ounce of gold, what I have in my finger, to 1 ounce of silver, right? So 110 to 1 is a far cry away from that 20 to 1. So my expectation is to see, because this is what history shows me, is that ratio will narrow. Then as we enter the hyperinflationary phase, I believe it will grow again, because again, that's what history shows me. I'm also going to give you a bit of a longer view on this, because this is, again, the US dollar to the British pound, but now this is going out 10 years. And you can see in the 10 years, the dollar is not even 12% stronger than the British pound. It's so irrelevant, but this is what we hear all the time. So understanding when they say that, what that actually means, empowers you to understand what they're saying. Here is the spot silver chart over 10 years, up 421%. And here's the spot gold chart. Now, what's interesting to me, because that's up 349.53%, is all over a 10 period. Typically, you don't, and I do this all the time, you guys know that, you typically don't see spot silver outperforming. But that's the level that it's outperformed in this last year. So this is a repetition of history. It's a good thing, but it shows you the truth, or closer, of what's happening with the fiat money, and why we are probably hearing all over the place that it is the devaluation trade, and that now even Wall Street is saying every currency is falling against gold and silver. But paper will not help you. You gotta have the physical.
Lynette Zang emphasizes owning physical gold and silver, reminding investors that if you don't hold it, you don't own it. She explains recently rallies in spot gold and silver, noting prices are far above the 200-day moving average, which often leads to consolidation rather than collapse. Zang stresses paper markets move fast, but physical markets do not. She also highlights the extreme gold-to-silver ratio near 110.1 versus the historic 20.1. expecting long-term rebalancing. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.